mean, my bad. My bad. But yeah, so that's like the average stop loss range that I have.
Do you
Obviously,
mind saying it again for the recording?
yeah, my average stop loss range for GJ is like 10 to 35 pips. Gold is going to be 35 to 60 pips, sometimes 25 pips, and silver is about the same.
Thank you, bro.
Yeah, no problem.
Raul,
What's good, bro?
how to count pips on silver? Like,
So you just move the decimal point back one. This is normally what I do. You can also use a session indicator. So if this is 2,510 pips, this is 251 pips.
so it's like gold, right?
Yeah, practically.
Okay. Thank you.
You can always just use the position size calculator to make things a little bit easier for you.
Thanks, bro.
Yeah, no problem.
Yo, one more thing, Raul, did you cut the JJ sell?
Nah, it was too early. Like it's, Asian. What I want to wait for the sell on GJ is a pullback back into 155, and we'll look for price to go short again. This is like a huge drop. What is this like? From this point to this point, it's 100 pips.
I'm talking about like if you go on the 4 hour.
Talking about this?
Like, this is that drop.
No, I actually bought yesterday.
Oh, really? After the break of structure on the 30-minute.
Yeah, but I ended up getting out at like pretty much a break even, like a 1 to 0.8.
Yeah, okay. So yesterday I bought silver. Let me show you my position. If you go to silver.
Right
here? Yeah. I bought after that double bottom.
Right here.
No. Down. Go down. Down. Yeah, that double bottom.
Okay.
Yeah. So I cut 1 to 7.
Yeah, but I mean, pretty clean trade.
It's what do you think, so?
I mean, it's pretty clean trade. More important is that you make money. Because, I mean, you have structure all throughout this area here. As long as price maintained above this structure, you can look to buy.
Yeah, thanks.
If you were buying at previous resistance, now turn it to support. So, I mean, what's more important that you make money?
Thanks, bro.
Yeah. Anybody else got any other questions? I mean, at this point, like in terms of like a breakdown, like it's as simple as we got to wait for a pullback for gold, probably back into 1950. GJ is the same thing. We got to wait for a pullback to look to short back into like 155, 500. And silver is a little bit different because now silver is trading at resistance. So we would have to wait with silver. I'd want to see like a cleaner break above, pull back into resistance, or maybe like even a pullback into this area right here, like all of this, we could look to buy in here. Let's say price up to 25. But yeah. So anybody else have any questions or want me to answer?
Hey, Raul.
Let's go, bro.
Hey, when you started trading, you used to take a lot of trades, like you blew your account doing that at the beginning?
Yeah, over trading.
Yeah, I did that today, man. I did it with US 30.
Yeah, over trading and over leveraging will kill your account quick.
Yeah, I did that.
Quick. You just got to limit yourself to the amount of trades that you could actually take.
Because I just started because I just got out of federal prison, so this is the first time I was being profitable.
Yeah.
It kept dropping, and I just kept trading and trading and trading, and I almost blew my whole account.
Damn, that's crazy, bro. Yeah, I mean it's part of like the learning curve, getting over like that over leveraging, over trading phase. It's part of the learning curve.
All right, I just wanted to know that because I was like, damn, I felt like a dumbass.
Yeah, I mean, again, like it's part of the learning curve, like I'm sure a lot of us in here have gone through it. You just got to limit the amount of trades that you could take. So in my example, I'm only allowed to take 3 trades a day. Right. And I wouldn't recommend, like, unless like you're scalping, I wouldn't recommend going above 3 trades a day.
I got to discipline myself with that.
It's all a learning curve. With time you'll be able to do it.
Yeah, I just been out for 4 months, so I just started. So
yeah, bro, just with time. With time you're good.
All right, man. Thanks, bro.
Yeah, bro.
Yo,
What's good, bro?
I got a question. So about GJ. So I know we're waiting to see that pull back to 155, 400. But let's just say price does not pull back. Like it goes all the way back up, but it doesn't reject that area. When would you actually change your bias to a buy on the 4 hour time frame? Would you wait until it breaks structure above 156, 500, or
Yeah,
would you?
I wouldn't look to buy GG unless it breaks above 156, 500. Not even
Oh,
156. Because once GJ gets back above this area, just
mhm,
trading higher, what I would
mhm.
wait for is maybe something like this, and then that's when I would change my bias.
Okay, gotcha.
Yeah.
All right,
But
thanks, man.
for GJ to sell, I want to see it maintain under this 155
11.
area.
Okay. All right. Thanks, man.
Yeah.
What about on GU?
GU. So the thing with GU is like it's consolidating for quite some time and it's starting to break under this area. So definitely looking to go short at this point in time, back down into here long term. Again, like it's almost like the same concept. I would like to see a clear break, a retest, and then look for price to continue to start trading lower.
But
Yeah, but there's definitely going to be some form of like buying pressure here. So we may not even like actually see GU drop until later.
yeah,
Here's when we'll see the real drop.
yeah, it gotta get past that area first.
Yeah, there's pretty clean traffic for GU. Like once it breaks under this area, we're gonna go down to this area,
But
which is like 70-ish pips away. Yeah.
But
Can you give us like a live breakdown of top-down analysis on any pair?
Let me see which one. So I guess we could do like GJ. So if you look at GJ on the weekly time frame, obviously we know that there's resistance all throughout this range here. And the way that this current weekly candlestick is forming is price is currently breaking under the lows of the last 2 weeks. So there we can already start to see a transition within price. Notice on the last few weekly candles, we see price actually forming higher lows. Now we actually see those higher lows being completely taken out, and now GU or GJ has formed this lower low at this point, right? Along with that, we look at the highs of the week, and the highs are just getting lower and lower as GJ is rejecting this area of resistance, which clearly is showing us some form of selling pressure. Now, the only thing that we'd actually have to pay attention to would be this area over here on GJ, right? We have to see what price does when it gets down to this 153,900 level to see if price will break that level or continue to actually trade lower. But we know that price is rejecting this area of resistance, so we can expect price to go down to the nearest area of support. Now, if we go down to like a daily time frame, we could see this area a little bit better. It's not like as exact, but we know, again, like when it comes down to supply and demand, support and resistance, it's an overall zone, right? So GJ to get down there still is about another, let's call it 100 pips away. So now we have to identify that we've already identified where we want to see price actually travel to is how we could take advantage of the projection that we have with price. And the only way I see we can actually take advantage of a move like this is for price to actually give us a pullback. Then I ask myself, where could we see price possibly pull back to? The nearest area of resistance that had just been broken is this one. So I would like to see price come back into this area and give me that rejection. Do I think price is going to pull all the way back up into here? No, I don't think so, just because of the way price is trading right now. At the end of the day, we never know, right? But this would be the best area to actually look to sell GJ again before looking for price to continue to go down to our overall target being in between this 153,800 and this 154 zone. So that's how I would like to take this GJ position. But at this point in time, there's too much volume and it doesn't look like anything is really going to stop GJ right now. Although, again, I would like to see a pullback into this range. That would be the best trading setup that I would see with GJ.
Thank you.
Hey, Raul, just on that pair, say that it goes back up to retest that 155.
Yeah.
It breaks above. How do you know if it's a fake out or not? Because then say that like it goes above and closes above in the 4 hour or like the 8 hour candle or whatnot, but then it goes right down into your direction. How do you differentiate if it's going to go back up to the nearest zone or it's going to actually go down into the direction that we anticipated?
So are you talking about go up to here or just go straight down to here?
Or go up and actually break above,
So like,
but then eventually coming back down.
so like if we wanted to eventually come back down, we wouldn't want to see price break above this overall zone. We'd want to see price kind of maintain itself under this area, right? Now, once price starts to break above it, the only thing to do is simply wait, right? All you want to do is just kind of sit, sit on your hands and wait as long as you possibly can until price does one of the two. Either come back down into the zone and start rejecting where you could then look to actually buy, or wait for price to actually come back under, give you a little bit of a pullback to this area, make sure price rejects this area, and then look to take it back down into here.
Gotcha. That's perfect. Thank you, Raul.
Yeah, no problem.
Raul, you set your SLs and your take profits of the 4 hour setup?
It depends on the trade. Like yesterday, no, because I was trading an intraday time frame. But now that I'm looking for like an overall move and a bigger perspective on where we could see price go, everything will be based off the 4 hour. In this situation, at least.
You think this situation would be more like a swing type of trade, right?
Yeah, for sure. 'Cause that's a pretty big move for GJ.
Yeah, I think it's gonna take some time for it to like retrace and get that set up.
Yeah, for sure.
But the risk to reward will be rewarding.
Oh yeah, 100%. Like if we like short in this area here, we can set a stop loss maybe somewhere around here. So 30 pips, and then our target could be down here. So that's like 5 times our risk. Again, it all depends on the rejection and the highs. Well, in this situation, the anticipated lower high, where that would be, et cetera, et cetera. You know?
Hey, Raul.
What's good, bro?
Sometimes it's not confusing myself, but like sometimes I find, let's say, how I can say this. It's kind of like I find some zones on the daily time frame, and I feel like one is more important than the other, but I can still see a rejection from it. Like I have a zone on GJ at 154.750 based off the daily time frame. And I saw the zone that you spoke about, the red line that you have there, and I also had a line, but I also have a rectangle a little bit below it, which price rejected a couple of times on the daily too. So I'm like, the zones that are, two next to each other. Mm-hmm. So it's kind of like, I'm kind of confused on that. Like, should I use which one as a take profit? The nearest one, or, if it breaks, I can still hold it. Yeah. Or how do I wait for this break?
In that situation, I would put it to the nearest one, and if it breaks, you can continue to hold it.
Okay. And for this, let's say I see for example, GJ pulls back, I enter a sell, and I have a support there. And how do I can expect price to break the zone based off the momentum?
Yeah, pretty much.
Because sometimes it will pull back a little bit and then break through it.
Yeah, I mean, that from you to actually hold the position to anticipate price actually break like a level of support all comes down to how that candlestick closes. Because we want to see momentum hold around that area. Once you see, like, let's say this is a level of support here, like an example, if you see the candlesticks maintaining itself being, huge, right, then you can anticipate price to actually break. Once you see price, approaching the area, you start seeing the candlesticks getting smaller. The smaller, you start seeing the wicks, get a lot bigger, right? Then you can anticipate price to actually reject because selling momentum is slowing down.
Okay. And so let's say for this example, we're basing this trade off the 4 hour, and I should wait for the 4 hour candles to close, right? Not the like 30 minutes, 1 hour.
Yeah, 100%.
Okay, perfect. Thanks, bro.
Yeah, no problem.
Hey, Raul, if you don't mind,
Yeah.
could you just do a breakdown of GA? I don't know if I don't think you trade that pair, but
I promise you, out of the last few years I've traded, I've never touched this pair. But okay, so let's go to the monthly. So like, I mean, if you pay attention to the monthly time frame, right, what we could see here on the monthly is that there's some form of a level of resistance here that price currently has been rejecting every time it's came up to this area. Rejected it last month and it's rejected it this month so far. So we know that there's some form of resistance in this range, right? We go to the weekly time frame. What we could see is a little bit of a cleaner rejection. So what I'm going to do is actually adjust this to up here, just so we can be a little bit more accurate. Maybe even just draw a zone of where we could actually see the rejection itself, and then get rid of this. And what we see is week after week, price is continuing to trade lower and lower, making lower lows, right? Also, one thing to keep in mind is this area right here, right? So clearly there's a support and resistance level there. Let me put an actual line. There's some form of a level of support and resistance here that price had indecision, where once price broke above and maintained itself above for the last few weeks, even though sellers were trying to push price lower, even with this candlestick, you can see it there a little bit better, right? So clearly, we're starting to see that we could definitely see price go bearish. What's only concerning so far is that there's only a week and 18 hours left in the day, and price is already leaving this big wick, which the wick could easily fill. That's not really that big of an issue, but there is some form of buying pressure. And one thing that we do have to keep in mind here as well is this level of support that's down here. As you can see, price came back up above support and even maintained itself above it when it came in this area over here. Now, if we go to a daily time frame, things are a little bit different. What we have here on the daily time frame is support all throughout, I want to say, this range right here. And notice how price ended up closing under this 50 SMA. We also pay attention to market structure. What we have is high, low, lower high, lower low. So what we need to wait for, what could be happening right now, is price is actually pulling back to make that lower high point, where we could see price actually continue to trade lower back down into this 1.8, 5,500 range. So now let's kind of go down to a lower time frame. Right now, on the 4 hour time frame, what we can see is that daily market structure, that daily bearish structure in a little bit more detail, because if we go back to the daily time frame, we're just going to see less detail. If we go to the 4 hour time frame, we're going to see less detail, but we know on the daily time frame we have high, we have low, we have lower high, now we have lower low. So these are our main points of market structure. So what do we see here so far in the 4 hour time frame? What we see is price currently retesting this previous daily lower or lower low point, and this could potentially be the next lower high point. The only thing I would want to wait for in terms of looking to actually go short is some form of a rejection. There's two ways you can wait for this to look to actually continue on hopping in on this trend, right? Let's say, because this is how I always anticipate like my risk reward ratios. Let's say price gives us that clean bearish engulfing. Our targets are going to be right here. Stop loss, let's say, is going to be about up here for 2 times our risk. So we're going to gain 2 times our risk. The trade is valid there, right, in terms of risk to reward ratio. So that would be a more conservative approach, waiting for the 4 hour time frame to actually close. A more aggressive approach would be to actually look for an engulfing on this hour time frame. So let's say this hour time frame actually engulfs and then closes right here. What you could then do is enter the same trade, just a little bit more aggressive, maybe with less risk. Probably stop loss above this area if you want to be safe. You want to put the stop loss above this high right here, right? And then you could actually look to target the same target and squeeze a little bit more risk to reward, or squeeze a little bit more reward in terms of then waiting for like the 4 hour time frame. Or things could change by then. Like let's say this candlestick closes here and the next candlestick is a bearish engulfing right here. Then you just kind of move this up a little bit, adjust your stop loss a little bit, maybe leave it a little more conservative there and squeeze a little bit more reward out of it. if you're waiting for that hour time frame to close. But before anything, you still want to wait for this 4-hour candlestick to close. This 4-hour candlestick is still fluctuating. Price is most likely not going to drop, if it's going to drop, until this 4-hour candlestick actually closes. Because again, like, all your time frames need to be in sync. So when this candlestick closes, the next candlestick is the one you can anticipate to actually go short. So was like an analysis there on GBP AUD. I hope that cleared things up for you. Only thing I would be concerned with is if price keeps trading higher, make sure price doesn't find support here and then continues to go higher. That's it.
I really appreciate it, bro. Thank you.
Yeah, no problem, bro.
Raul,
Yeah.
I have a question. So, question is like, which one is like more have high probability between trading supply and demand or trading like support or resistance?
I mean, they're practically the same thing. It's just one of them is dumbed down.
Okay. Thank you.
Yeah. Yeah. So, anybody else have any other questions?
Yeah, I have a question about the SMAs. So say you're seeing market structure change from bearish to bullish, and you see a support level being respected. So you take the pullback into that area for the buy, but at that time, the red is over the blue in terms of SMAs. Is that a low quality trade? Or like medium probability?
I'm trying to picture this. Can you say it again?
So you see how the chart is right now, right?
Red over blue.
Right. So you see, say price holds that support area that you have highlighted.
Okay.
It pulls back into that area. You start to see support established there, and you take the buy. Is that a bad quality trade? Because the red
I wouldn't look to take the buy just because we know where we are in terms of daily market structure. I would maybe start to look to buy once price breaks above this hour high.
Okay, got you.
Yeah. So I would wait for something like this and then start looking to buy.
Okay.
Yo, Raul.
What's up, bro?
Would you be able to do a quick look at Dow Jones?
Yeah. Damn. I mean, well, the way I look at it, it's almost like the same impression as GJ. We just gotta wait for a pullback. But I mean, if Russia just invaded Ukraine and that was announced, who knows what the markets are gonna do? But clearly, stocks are crashing. Commodities are going up, not surprisingly.
Hey Raul, I just had one question. Like, if price of the Dow Jones is going down, like that indicates like gold is gonna go up. Like this is like straight melting up. Will gold go up? Like, or is there any chance like gold can reverse to like it can go on sells to even if the price of US 30 is like?
If there's big money being moved out of gold, then yeah.
Oh, so
look at
it can just go like reversely the price of US dollar. That's what I'm trying to ask.
I'm not understanding the question very well. Can you repeat
that? Just a scenario, like if the price of US 30 is like straight going down, and can there be a possibilities that at the same time gold is melting too? Like they are inversely proportional, right?
I wouldn't think so, but anything's possible at the end of the day.
Oh, okay. So they are like they're individual pairs that's how you're gonna put it up.
You got to think about it, like one's a company, well, technically the top 30 companies, and then the other is a commodity. So a commodity is a commodity, and a companies can do good, companies can do bad, but there's only a certain amount of gold that there actually is in the world.
Okay. I kind of understood that. I'll just look into it myself too.
Yeah. Let me know what you find.
Yeah, sure.
Yeah. So,
bro, if you don't get the pullbacks, you just sit on your hands.
Yeah, bro, there's nothing to do.
All right, for sure.
Yeah. Any other questions?
Yo, so from now to London, like to sit on your hands, what do you like recommend? What do you do like in your own experience?
Go watch Netflix. Go do your own thing, and come back to London session.
That's
Gotcha.
facts. Run some Warzone, bro.
Yeah, I was about to say just go run some Call of Duty or something. Yeah, that's literally like you got to take yourself away from the market, because then like you're gonna be inclined to want to get into a trade. No, you should. No, you shouldn't. Right? You
Facts.
gotta step away.
Can't
Facts.
force no trades, bro.
Yeah, facts.
So like,
go play Call of Duty, leave the crib, do what you gotta do, and come back.
so like, it's like setting like strict time rules for the business hour, I will say, like for trading. Do you prefer that, or like you should back test as well if you get time, or during the day or something? If I ask that, like I used to back test whenever I get the time, and then on the London session I was like complete empty, like what should I back test now? So I picked up a random pair and started back testing it now. At this point, like I read some books and means that trying to be productive till from before 2 hours before London session to like market overlaps, because I trade just London. So would you say that it's the right thing to do in perspective of business, and not just trading in business, like just being productive on your business hours, or you should do whenever you get the time?
I would say, do whenever you have the time, so then you can actually watch the markets live. But don't just backtest any random pair. Backtest your pair.
Okay, so be productive whenever you get the chance to do.
Yeah.
Okay, thank you.
Do you think gold could have a huge push to 1960 and then come down?
Well, I mean, at this rate, and
at this point, like,
yeah,
I don't know.
That Russia just invaded Ukraine and that was announced, bro. Like, there's so far, like, nothing is stopping this train right now. That's what it looks like. Literally.
Bro.
I mean, it just looks like it's going to be one of those days where it's going to be like no trades. Maybe we'll see something new from New York, but like, there's like no possible way you could take a position right now, unless like you're like, oh yeah, entry here, stops here, targets, 2,000. But even then, like,
bro, Bitcoin is crashing so bad.
Wow.
Do you think New York is going to be more juicy than London session?
Oh, for sure, bro. Once the U.S. market opens, for sure.
Probably better to sleep in and then trade New York.
At this point, I'd be I'm very curious to see how the S&P 500 is going to be doing tomorrow.
Yo, if you're trading like the New York session, what time like do you get up and you see majority of the times you have a trade to trade? You get a trade opportunity.
8, 9 a.m. is
like
the opportunity.
Okay, so you'll wake up like what, 8, and then start analyzing, or you wake up like earlier and then you take your trade around 8, 9.
Yeah.
Okay.
That's the crossover, right? 8, 9.
Yeah.
Alright.
Yeah. So there's 5 minutes left in the webinar. Anybody else got any other questions they want to get in?
Yeah, real quickly. Do you don't trade Sundays, right? I think in your videos, lectures, you mentioned how you don't trade it.
I do trade Sundays, but Sundays aren't. I trade Sunday London session, but I don't trade Sunday like 6 p.m. Sundays typically like it's either a hit or miss for me. I've never been like super profitable on Sundays.
Yeah, I feel you. I'm thinking about just not trading Sundays at all and just wait till Monday because it's really out of whack.
Yeah, but you don't have to trade every day. It's just the thing with me is I like to test my probabilities.
Gotcha.
I have one more question. So the crossover is like 8 o'clock New York time, but like, would you wait for the crossover time or the 4-hour close at 9 a.m.
Crossover.
Okay.
Hero, like, I just want to ask a question related to the structures. Like, suppose any peer is giving a pullback, and how do you really know, like, at this point, it's not just giving a pullback, it's reversing, even if it hasn't broke any structures, or you can say it just have broken the higher, the short term, like it from the candle and then pushes downward again, like not making an actual pullback, just reversing. It's just reversing, and the push itself, it's like a real big to break the other structure, like gold did in previous days.
I mean, typically, like when you're gonna see like a change in structure, what you won't see directly right away is like a straight break. What you'll see is maybe something like this, right, where there's consolidation, a move down, move up, and then another move down, and this is a change in structure. Because you now are not, you're now no longer like maintaining that higher high, higher low, because here there's a low, then here there's a lower high. But then the issue you could run into is on the daily time frame, the structure could still be very bullish. So it's like a tricky game to play, and it's like a very situational game as well.
Okay.
You have to take into consideration the daily time frame, the weekly time frame. You know what areas are being rejected. Like it's a lot of putting things together, and it's not just like one specific answer.
Okay, so can I just move to the place where I got confused on the goal? Like,
Sure.
it's around like 6 January on 4 hour, 6 January. It just completely reversed. I think I can see a double bottom, but it's too short to notice at this one. Yeah, that one.
Yeah, but this isn't a trending market. This is a consolidating market. That's the
Okay.
problem.
I got you what you're saying.
Yeah.
And then like again the thing happened on like 28th of January. So would you consider that again that a consolidation market for gold?
Yeah, like all of this right here is a consolidation range. Price really isn't going anywhere. This is a trend. This is a trending condition.
This is
a consolidating market. Like you can still catch moves within this right here, within this right here, within this, right? Within each one of these consolidation phases, you can still catch the moves, but this is not a real trending condition, right? Compare gold then to gold now, right? Look at
it's really trending.
Yeah.
With gold like breaking the previous highs from like I can say 1908, I think it's gonna like buy at this point. What do you think?
1908?
Yeah, 1908, somewhere around this zone on daily.
You're talking about down here?
Yeah.
You're talking about buying it?
From like, can you go on to like daily time frame?
Yeah.
And hop on to like 2 June. Yeah. So taking like it just straight melted from this point zone, like now it's trending upwards. What do you think? Like it's in a buying condition. It's break of the you can say the resistance zone, and it's gonna get like make new highs, or there's a point it can reverse.
Highs, but we just have to wait and see what it's going to do at this point. Because I mean, gold is moving like this because it was just announced that Russia had invaded Ukraine, so we don't know what's going to happen. Gold could completely retrace, but we'll look to buy it again, or gold could just keep flying.
All right. My question was like this. I can see a resistance zone like around 1952.
Webinar ended. So if anything, DM me. But what were you saying?
Like around 1952, there's like a strong resistance zone from like 2 touches on that resistance zone from where previously gold melted around
Yeah.
the area.
We're pretty
So
much just
like
gonna have to wait and see if it holds. And again, it comes down to momentum.